Hi guys, welcome to What Stock, where I tell you what stock I'm buying next and why. Today I'm going to show you the best stock to buy to get exposure to the meat-free industry. But before I do, let's take a quick snapshot at the market opportunity and who the major players are. Plant-based alternatives are seeing major adoption among young adults and parents looking for healthier alternatives for their kids. As a result, demand is growing fast and there are large markets left to tap into. This makes meat-free a great place to invest your money if you can find a winning company to do so. Right now, there are hundreds of companies making a dash for this market space, but there are only a handful of companies who are doing it in the right way. These are the stocks I've screened that are taking the meat-free boom seriously, have a good product offering, the right marketing and go-to-market strategy, and a great competitive differentiator that protects them from competition. But in the immortal words of the Highlander, there can only be one. So stick around and I'll tell you which of these stocks I'll be investing in when the markets open. Before I run through my analysis, make sure you hit subscribe and ding that bell so you never miss a What Stock pick. Now for the big reveal. Conagra Brands are an American packaged food company in Chicago, employing 18,000 people and selling their products all across the globe. They diversify over hundreds of brands, including Birdseye and Chef Boyardee. In 2018, they paid over $8 billion for Pinnacle Foods, acquiring the Gardein food brand in the process. With Gardein comes an $80 billion market opportunity for the meat-free space, establishing Conagra as a meat-free major player and direct competition to Beyond Meat. I get really excited when I see heavily diversified market leaders spend large amounts of money buying up companies to go after new markets. But let's take a look at Conagra's numbers to see if it is worth buying. Conagra have been a reasonably consistent grower, but in the last 2 years, demand for the stock has gone up following the Pinnacle Foods acquisition. In the last year alone, it saw a 30% increase on its share price. This beats Kellogg's and Beyond Meat. In the past 5 years, their top line revenue has seen exponential growth, actually outpacing Amazon and Carroll's Restaurant Group. A lot of this can be attributed to its e-commerce sales. In the past 10 years, they've averaged just over 20% earnings growth every single year. In the last year alone, they've almost doubled that. And that's better than every other packaged food company I've seen. Last year, they grew their free cash flow, the thing we care most about as investors, by over 50%. In the past 3 years, they've grown their book value, the thing we care second most about as investors, by almost 20%, which is a huge improvement on their 5-year average. These guys are hungry for growth. Plant-based growth. These numbers are seriously impressive and far outpace the 10% growth rate I'm looking for in every one of these categories. Let's take a look at the management team to see if those numbers are equally as good. This year, Conagra have seen a return on invested capital of just over 8%. This beats Nomad and Beyond Meat. Things spice up a little bit when you look at their return on equity numbers, which is just over 10%. This beats Hanes and Carroll's. At face value, things could look a little bleak with an ROA of 3.76, but this is actually above average for a packaged food company and significantly beats Beyond Meat and Bunge. The management team are finding really good ways to invest their money, and when we compare return numbers against debt, equity, assets, they're actually pretty impressive, and they're doing a better job of investing than some of their closest competition. Now that's a management team I want to invest in. Conagra do a pretty good job of wiping the competition with how good their gross margins are and how consistent they are. Consistency being arguably more important. They beat major gross margin players Ingredion and Tyson Foods. Conagra actually took the #1 spot on operating profit, beating monolithic companies Kellogg's and Amazon. What's far more important though is their operating margin has actually been increasing every single year for the past 5 years, which means they're finding cheaper ways to build their product and deliver it to market. Their net margin is really healthy for a packaged food company and inches just ahead of competitor Nomad and wipes the floor with Hain. What's really important is that net margin has been increasing, which is pretty exciting to see. They're cheaper, they've got an economic moat, and they are competitive. Now, before we get onto the good stuff, the projected growth rates, we have to look at the balance sheet to make sure there are no major debt obligations that could take priority over innovating the product line. The good thing to see here is Conagra are reasonably well leveraged for a foods package company, and their interest coverage ratio more than triples the interest owed on the debt, which means their creditors aren't going to chase them. I wouldn't say they're cash or asset rich, but that's nothing out of the ordinary for a company of their maturity in the industry in which they operate. The balance sheet is okay. It's not the best I've seen, but there's nothing jumping out at me that's saying, Houston, we have a problem. Now let's get down to the cool stuff. Projected growth rates. In the short term, Conagra are set to see a 30% growth this quarter and 12% growth next quarter. That's a double-digit growth we like to see. Long term, the thing we care most about if we want to invest and forget, should see around 9% next year and 7% each year for the next 5 years. That's really healthy and consistent growth. And when we compare it to the other players in the meat-free space, it is certainly one of the best. And because we've done our homework, we know, hey, it's pretty bloody reliable. The question now is it trading at a good price? Right now, at the recording of this video, Conagra is trading at around 21.84 PE, which is around 7 points lower than the PE ratio of the S&P 500. It's also around 4 points below the consumer defensive industry. Now, I didn't think I'd be saying this when I shortlisted Conagra, but we have here both a high growth company and an undervalued company. My meat-free Christmas has come early. That's like finding a unicorn in a haystack. So for this guy, it's a big fat buy. Guys, I hope you liked the video. If you have any questions, comments, or feedback, or even if you want me to explore an industry you're interested in, leave your comments below. Thanks for watching, and I look forward to seeing you in the next one. Happy investing.